Clark Hodges with us, financial strategist at hodgescapital.com. Clark, thank you for joining us on WILS.
Oh, you're welcome. Thanks for having me.
Yeah, are you going to be drinking champagne tonight, or?
Nah.
Is it?
It's going to go higher, so why do that, right?
What makes you so optimistic about this year?
Well, my biggest, there's a lot of things, but my biggest thing is just the overall pro-business environment that we have all of a sudden find ourselves in with President Trump. And by going out and doing the things that he promised that he would do, the market is basically assuming that there's going to be a corporate tax cut. And if there's a corporate tax cut, then these companies are going to earn more money, and that's a good thing. So I think that's the biggest thing, just the overall keeping of promises by the President Trump and the pro-business environment, because the last 8 years has been anything but pro-business.
Now, well, though the market has been going up, what do you credit that to over the last 8 years then?
Well, the market always goes up. 2/3 of the time it goes up. It has, it's going to go up. We're at 20,000. It's going to be at 30,000 someday. And it goes up on earnings. So corporations, even in a negative business environment from Washington, D.C., can make money and have earnings. It's just harder with all the regulation and the higher taxes.
Right.
So,
let me ask you this, though, Clark, because we hear that we're long due for a correction. Why aren't we seeing that?
Because nobody's going to predict it. A correction will happen when everybody least expects it. It's pretty simple that way, really. You're not going to be, there's nobody that can hop on a radio station or hop on a television station and say, okay, get out of the market by this Friday because next Monday you just can't do that. That just doesn't happen. It doesn't work that way.
Okay, so this thing about January, like what's the rule of January's? The market follows. Go ahead. What is it?
Yeah, as January goes, so goes the year.
Do you believe that?
No, didn't happen last year.
It did not, because January was bad last year, right?
Yeah, January was bad. The first 6 weeks were real bad, and by the end of the year, basically November and December were such good months that they far outdid those 2 months, that month and a half. But yeah, we had a really good year in our funds, and so yeah, it was definitely not anything like the first 6 weeks. Okay,
so the tax cuts are good. What about the national debt? We just saw a report saying it's going to go up another $10 trillion in the next 10 years. Does the market care about that?
Not particularly. It doesn't. The market cares more about earnings and companies earning more money. And when you have a Federal Reserve and a government that basically has a printing press, but they can just print more money, it's really not that big of a deal as it relates to the stock market. It is a big deal, but as it relates to the stock market and the fluctuations of the market.
Do you agree with President Trump that the interest rate needs to go up? They've been holding it down for way too long.
I think it will go up. I don't have an opinion either way. If it does go up, then you are going to see financial companies do better, and you're going to see probably mortgages and housing do a little better because there'll probably be a run on the bank to try to lock in some mortgage rates. But, I don't have an opinion. I'm not smart enough to predict
Clark,
why this should go up or why not.
Yeah, anything right now, I mean, it sounds like you're optimistic at the moment. Anything right now that concerns you about the markets?
The whole the society that we live in as a whole on fake news and the political environment that we find ourselves in. And then you always have the threat of, domestic terror. And those kinds of things can happen. And but I just think you could have a sell-off in a sector. I mean, you could, I don't know if you recall, but last year Hillary Clinton made comments about the private prison business, and the companies that are in the private prison business, their stocks got killed, and their stock prices got killed. So there could easily be something like that that Trump could tweet or Congress could do that could hurt a sector.
Yeah.
But usually those are knee-jerk reactions, and they overreact to news like that.
Clark Hodges, financial strategist at HodgesCapital.com. Here on WILS. Clark, thanks.
Thanks for having me.
Yep.